Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to the KS family. Let's run the numbers. Bitcoin currently down 0.25% to 50,463. Ethereum up 2.66% to 4417. My mission is to assist you to be more of a financial blessing to yourself and those you love and gain real wealth in the process. I focus on the smart money mindset. If that sounds good, please subscribe to YouTube. I'd like to thank everybody that's reached out and contacted me by email to lock in their very deep discount to the Crypto Trading KS Masterclass. I've been working on the Masterclass videos basically from the time I get up to often 1 or 2 in the morning, and it's pretty full on, and unfortunately I'm not getting the time to respond to emails, but I just wanted to let you know that if you've sent me an email on December the 11th, I will send you an email with all the details of the masterclass. So no problem. If you sent an email, I'm aware of it and I'll get back to you on the 11th. Just wanted to let everybody know. Your discount is locked in and I will definitely be in contact. Rule 774, master yourself to master the market. Our community is about much more than money. We're about money plus real wealth. Real wealth includes all the components that make life truly enjoyable and worth living, such as inner and outer peace, fulfillment and meaning, purpose and fearlessness, courage, honor, and kindness. Very, very beautiful ways to live. Every trader and investor has to fight the dual problems of self-sabotage and self-doubt. One way around this is to understand how incredibly worthy you are, because you're absolutely and utterly unique. There is never going to be another one of you in this entire world, and there never was previously. As such, you absolutely deserve kindness, love, meaning, and every success in life. Life requires your gifts, the positive excellence and value that only you can bring to this world. Unfortunately, many people enter the crypto market with rose-colored glasses. They believe everything is going up and always will. There'll never be any significant retracements. You just basically buy any crypto and it will 10x within a relatively short period of time. And everybody sees returns like this. For example, Bitcoin up 174% for the year, but up 1.6 million% over 10 years. And they say, oh, retirement, fantastic. Unfortunately, that is not the reality of crypto. So many people are sucked in by the smart money narrative, and it's to their detriment. Crypto is perhaps one of the most volatile markets that anybody can enter, and with the right knowledge you can use all that volatility for your advantage. But to not understand that it's volatile will create really big problems. That's why investors need a trading mindset. Investors are all about holding for the long term. That's a fantastic focus. Traders are all about buying at the right price and selling at the right price based on probability. Many investors don't worry about trading, and that costs them enormous amounts of money. For example, when people enter the crypto market, they can easily move into Zone 1. There are 4 zones that all investors and traders progress through to become consistently profitable and attain real wealth. Zone 1 is the panic zone. That's where smart money says that you can only ever get rich from going into crypto, and suddenly people experience 30, 40, 50% drawdowns, even more, especially if you're in different altcoins. And of course they panic. They were told a story. I just have to get into crypto and I can buy a Mercedes next week or next month. What's happened? And they panic, absolutely. But what we do in crypto is that we understand that we've got to move out of the concept of certainty towards probability. After people panic, of course, they naturally enter Zone 2. which is the blame zone. That's all about external panic and conflict and attacking others, mainly because their expectations were violated. They were certain that there would be life-changing money within a very short period of time, and everything could be done with absolutely no knowledge. Nothing works like that in this world. Many people see crypto as a get-rich-quick scheme. There is no such thing. All wealth, for it to be kept, needs to be earned. You earn it with your knowledge. You earn it with growing as an individual. Earning it means to have patience, to have a lot of rules, to have a 10-5-10 volatility fund, and of course to have forgiveness, not for other people but for yourself. You simply cannot know how things will go, but you do know that it's really, really volatile. Now, why do I say it's volatile? If we look back to the past bull run of the past cycle, we had some very substantial increases in price, but they're to be expected. It's a bull run. But what happened in terms of negative price movements? We saw 20, 40, 30, even 50% reductions. These reductions are what catch people off guard, and they actually end up selling really quite close or near the bottom when price reverses. Being a professional trader, a professional investor, and we know that all investors become traders whenever they buy or sell. Investors and professionals look to actually buy the fear. The redder, the better. Investors without a trading mindset see red, blood red in the market, and they scream and panic and run for the hills. That's when the professionals step in and buy what those people sell. The real question is, what is the trend and where are we going? To answer that question, we look at the KS model, which is a crypto technical trading model based on institutional price psychology. We're in the bull market segment of the run. Everybody expects higher prices. There's optimism inside the market. Some people say that the bull run is over. If the bull run was over, we would not see price action like this. However, there are some systemic issues in the market that are playing out right now. For example, we had the China miner exodus, which caused prices to plummet. Then we had China's showdown with crypto, making it and banning it for the 100th time, but tightening all the restrictions. And now we've had the Evergrande crisis, which has realistically been going for a very, very long time, but it's starting to make the tidal waves. But you'll see not many people are talking about it in the mainstream media. Why is that? The smart money is positioning itself right now. So what do these events, for example, if we get a black swan event now, and it is possible, and for example, do not panic when I say that. Don't just rush out and sell everything. You don't want to do the light switch effect. Let me just explain a little bit more. Zone 1 and Zone 2 are about and subject to the light switch effect. People go all in or all out of a position because they're addicted to certainty, and we know there's no certainty in any financial market, especially the most volatile financial market on the planet, which is crypto. People, of course, want to be correct, and they want to be correct all of the time, and they don't want to lose any money. So, of course, they naturally switch in, go all in, and go all out. They see any negative move as a reason that the positive move is over. That is simply not the case. All price moves in a wave. And when we see extreme fear in a market, that is the absolute ultimate time to be buying. To become a professional trader, to enter Zone 3 and Zone 4, you have to literally train your mind to see red and get excited, and to see green and get a little bit concerned. It's a bizarre thing, but that's exactly what professional traders and investors do. Going into Zone 3 and Zone 4 is all about probabilities. In fact, stacking probabilities. Looking through the entire market, looking at the stock market, looking at the news, looking at anything that can influence global prices and investor sentiment globally. It's always about multi-dimensional decision making. I sum it up with this little guy. Make in advance probabilistic choices. Know what you will do if the market just explodes upwards. Know what you will do if the market implodes downwards. And know what you will do. Have an answer for the question. What if it just goes sideways and gets really boring? What will you do then? Every professional has answers to these questions in advance before they ever put any money down. Retail investors and traders only have an answer to one thing. If it goes up, I'll hold. And that is what smart money is counting on. They are counting on you panicking. I do not want you to panic. After more than 30 years in financial markets, I've seen so many games play out. I want to immunize you against that. We can see the recent sell-off in Bitcoin look very much like other past sell-offs. We had a long spike down and we had a bit of a relief. Long spike down, bit of a relief. Long spike down, bit of a relief. Where could it go? Of course, we always have three simultaneous probabilities playing out. We look back into the past. What happened? We had a little bit of a gradual pop down here. From here, a little bit of a bottom. From here, a little bit of a bottom. So we could expect something around that red area if things go against the market. However, if things go positively, there are certain conditions that will play out, and we're monitoring these every single day. So what are we looking at right now? We can see we've overcome one level of resistance and basically entered the I don't know where I'm going, says price zone. Technical term. However, of course, this is more positive than negative. If we had a sell down under this resistance, of course, that's more negative. Price may just be consolidating at the moment, but it's better than it going down for sure. What you see is a lot of really positive pieces in the media about Bitcoin going up and everything is good. Just beware. That's the kind of the narrative that tends to play out in markets before things go the other direction. What we can see here, and we just look at the charts with probabilistic fearlessness. What is the chart telling us? The chart's saying that we have a level of resistance playing through here. Okay, we need to overcome that. Where do we overcome that level of resistance? At around $53,000. We've got to trade to the right of that line. Turn resistance. Resistance is like the roof on price. It says, no, the bubble of price cannot go any further than resistance. But if it finds a gap in the roof, skylight that's open, it can pop out and then it will go to the next level of resistance, which would be up here at about 55,400. And the balloon will bounce from resistance to support. This is kind of the way things go. And what we need to see for positive momentum is overcoming this resistance that's playing out around that 53,000 and overcoming this resistance playing at around 55,500. When price gets to here, it's looking so fantastic. We'll want to really get into it. But if price goes the other way, for example, the balloon of price hits the resistance and the roof says, get out of here, balloon, and it pricks it and it goes down, of course it will hit a level of support, a major level of support, which is around $47,000, $48,000, and we would expect it to bounce because it has that capability. It's a fairly clever balloon, isn't it? Inflating and deflating all the time. If it gets under that, it will have another level of support with this line. But we've seen from the past, if we start to lose support, potential prices down to 37,000 could be entirely possible. That's why when you do your asset portfolio allocation, have a percentage for trading the price that is. Have a percentage, and this will absolutely depend on you, your goals, your risk, so many things. Have another percentage for trading underneath that. Just break the price movement into different categories. I'll talk about this extensively in the masterclass, but it certainly gives you an idea of how you can benefit immediately. A lot of people, when they get into the crypto market, they don't understand Rule 45. No alt can escape Bitcoin's gravity. Bitcoin is literally like a planet. It has a gravity. When Bitcoin goes down and goes down hard, it will drag the entire crypto market down with it. When Bitcoin goes up, and it goes up very well, it will drag the whole crypto market up with it. New people think that everything is discorrelated or disconnected, and so they'll grab some fantastic meme coin, some coin that's going to kill some other coin somehow, and they'll invest all their life savings in it because they'll say, I'm getting rich, I know this is a killer, it's going to be number one, it's going to be bigger than everything. Professional traders use Rule 45 to understand the crypto market and how it's moving. Let's drill more deeply into Bitcoin, and now you understand why it's so critical to do. Bitcoin is currently trading at 50,739. We can see after this long tail rejection, we found dual levels of support on these two lines at around $47,130. Then we made our way up to a resistance line that's been playing out since the sell-off and have a little bit of negative air. We saw a long tail rejection down to the 50,000 level, but there was so much buying pressure there that it actually forced the price up. But we are still under resistance here, coming in at around the 51,500 mark. What is going on inside the market? What might be driving this downward pressure in crypto and of course Bitcoin? There are actually always a lot of negative things in the economy at any particular point in time, and there are a lot of good things as well. People tend to be attracted to the negative when prices reflect it, and tend to be attracted to the positive when prices reflect it. We just always look, as professional, smart money mindset people, we look at both the positive and the negative, and we just go, yeah, okay, well, that it just exists. Let's take advantage of it. We can see Mt. Gox remediation, episode 332. I can tell you there's been no movement in those reserves. Omicron is spreading, but hopefully it's a lighter form of the variant. And there's been some positive news out there that there could be treatments, and that's quite good. In terms of inflation and tapering, inflation we can look at quickly. We can see inflation has been on the way down since the 15th of November, nearly a month now. And so many discussions have been based around the Federal Reserve's action of wanting to taper more quickly as a sign that we really need to take the heat out of the market in terms of inflation. You can see inflation has been decreasing. It's quite an interesting narrative that's being applied here. In all likelihood, it's just simply the threat of tapering that's reducing forward-looking inflation, the 5-year break-even inflation rate and the 10-year break-even inflation rate. And we can see the Nasdaq is starting to bounce up. I believe the real headwind in the market at the moment is Evergrande, and it's really interesting to see that the news is not making such a big deal about it. It's going with the really good news stories that Bitcoin will be the dominant payment system in the world, and Bitcoin's growth will be exponentially adopted by countries. And of course it will. There's no question about that. Absolutely correct. Because Bitcoin and cryptographic currency or cryptographic assets are actually the foundation of the next evolution in the internet, and that's what they represent. They don't represent currencies or commodities or assets. They're actually a purchase of the next level of the internet. Some really good people in the community reached out and asked me a lot of questions and provided some fantastic resources as well. I'd like to share those with the community. Kevin provided this fantastic link to Al Jazeera. Let's quickly go through this article and see what the main points are. What we can see from this article is that holders of about 19.2 billion in Evergrande dollar notes face deep haircuts. What that basically means, they're going to get about 20 cents on the dollar repayment for their bonds. The key thing here is the restructuring of Evergrande is occurring without a government bailout. That's actually quite important to note. S&P Global Ratings has said that default is inevitable, but Evergrande is yet to declare official default. The company is planning to restructure its offshore public bonds and private debt obligations, but it will actually honor the onshore holders first. Beijing has reluctance to bail out the developer, and they've done a lot to see if the government has done a lot to see if it can limit fallout, and you'll see that a little bit later on. We've seen that lower rated real estate firms have plunged. At least 10% have defaulted on onshore or offshore bonds. Kaiser Group Holdings has been suspended. I just wanted to thank Martin for that. Chinese authorities are signaling that they want to ring fence, which means put a ring around it, try and localize the fallout of Evergrande to limit contagion to other parts of the economic system. And it's really interesting because the Bank of China actually eased restrictions. It cut into the reserve ratio requirements and released about $188 billion worth of liquidity. It said that debt crisis can be contained. I'll show you another really interesting article after this one. You'll see that we're getting a lot of conflicting commentary out of China at the moment. In all, Chinese borrowers have defaulted on a record $10.2 billion of offshore bonds. 36% of that relates to real estate. The critical thing here is China is real estate run. The real estate accounts for about 25% of their GDP and around 75% of household wealth. It's really, really significant. We see President Xi oversaw a meeting of the Communist Party's Politburo on Monday that concluded with a signal of easing in curbs on real estate and has pledged to stabilize the economy in 2022. But again, I say there's a lot of mixed messages coming out of China. The critical thing for global bondholders, they're last in line. That's as simple as it gets. They'll probably get 20 cents on the dollar. And that's about it, because we have to look at this as a potential catalyst for downward price momentum in markets. But please do not light switch. Don't go all out. I've seen so many comments floating around the place. When people read a negative news article, they just go all out. The fact is that the markets don't work that way. They move in waves. Definitely, it's always a good idea to free up some cash, but please do so if you've reached profitable positions and it's tax effective for you to do so as well. I'd like to thank Crypto Turtle for sending this one through. Failure by Evergrande to make an $82.5 million interest payment will trigger a cross default on nearly $19 billion of international bonds. It's basically like saying you have a beach and you pick up a grain of sand and you say you need to pay this grain of sand back, and you have a whole beach worth of debt, and the beach owner says, sorry, I can't do it, and then the whole beach becomes due. That's what is referred to as cross default triggers. It's really important to understand that. Kaiser is also in problems. It has a non-payment. It's actually been suspended. So it could trigger a cross default on offshore bonds of nearly $12 billion. The Chinese real estate market is under severe stress. I'd like to thank Richard and Domsky and a number of other community members who've reached out by private message. Very nice of you. Our community is so incredible. It's always sharing information and caring for other community members. It's really fantastic. Thanks everyone. What I wanted to let you know, there's been discussion about Tether holding commercial paper loans with Evergrande. Now, The media has been saying, or Tether has been saying, that it doesn't hold any commercial paper, but that hasn't stopped a lot of people from saying that it does. We spoke previously about Tether and USDC and BUSD, the stablecoins. Smart money, institutional money, is very, very quick to act. We can see that USD's circulating supply is coming up. Smart money is not doing a flight to safety. USDC is coming up a lot more. There's a lot more interest in USDC. BUSD is remaining relatively flat. If you have any concerns at all about Tether, there's a really easy solution. Basically just go to your exchange and swap USDT for USDC. It's very simple to do. You just buy one and sell the other, and then you can have money sitting in USDC, or if you like BUSD, you can swap your Tether for BUSD. It's not a problem at all. These things can be really good to manage. Many pairs of many cryptos are only tied to USDT. Just be aware of that. If you cycle out of Tether, you may have to cycle back in at some stage, but that is completely fine, and that's something that professional traders, they do it all the time. There are a lot of narratives that are being spread on social media at the moment. You need to be aware of them, but never ever panic. When people are in Zone 1 and Zone 2, they get subject to the light switch effect, which is just extreme panic. If you're panicking extremely, of course my thoughts and heart are with you. It's a really hard thing to go through this panic, but just realize there's no certainty in financial markets. When you can embrace that, when you can do that, you can actually use that volatility for your advantage. If you want to de-risk, just sell a little bit and then just focus on what you're selling so that it's profitable for you. And of course that always comes back to your independent needs and requirements. If you're holding long term, you can weather out this storm. I'll just show you something quickly because I think it's really important to understand. If we go back to the KS model, you can see this black swan event here. That was the US liquidity crisis and the COVID sell-off on the 12th of March 2020. That was a precipitous drop. That was a horrible experience. What happened next? We saw an incredible increase in price. We're having exponential adoption of crypto. Crypto is the future for so many reasons. If we get a precipitous drop like this, that's the ultimate time to buy and catch the falling knife. However, you have to have a degree of money around to do that. So we always, as professionals, we always have some percentage of our portfolio just to do things like this, to catch these falling knives. And black swans can attack anytime, but they typically build up over many, many months. That means just because you read something negative or kind of end of the world-ish in the mainstream media, that's just really positioning by smart money to take money from the retail investors. Just think about it like that. So many times you see a really bad negative news item and you might be inclined to sell, and you do sell, and what happens? The market rallies, and then you say, oh, I got it wrong, there is no problem, and you go and buy in and the market goes down. That's what smart money, that's what institutions do all the time. We want to get you on the right side of that thinking. The quickest and easiest way to understand investor sentiment is just look at what investors look at, the share price. When we look at Evergrande, which is this blue line, we can see it's fallen off a cliff. It had a bit of a bump up when there was a release of money, a sale of assets, and now it's just plummeted. This shows there is no confidence in Evergrande. We can see Cynic Holdings coming down as well. We can see basically all of them are tanking. And that's a result of systemic problems in the market. But this isn't just confined to China. This is pretty much everywhere. There's a lot of debt sloshing around in the system, and real estate speculation has been rampant throughout the entire world. As many people can attest to, if you wanted to go out and buy a house or buy an apartment or buy any kind of real estate at the moment, it's really, really expensive. It's out of control expensive. The really interesting thing, what does this mean for crypto? It's actually incredibly positive. Crypto, especially Bitcoin, is a limited resource. It's like digital gold. There is only so much of it to go around. And it's not like land. You can't actually produce more of it. Can you imagine if we could actually build land out on the sea? Well, hey, why not? It's been done before. Dubai does it all the time. The reason I've spent so much time on Evergrande, it's really important to understand what is going on. We can see just trading the chart that we view, probabilistic fearlessness. What does it mean? We're under resistance. We've got negative air. It's hard for price to get through this resistance at the moment. What does that mean? Potential, a lot of sell pressure above that line. Just always have your three probabilities playing out. Know what you will do. Don't only have one. Bitcoin must go up. Crypto must go up. What if it goes sideways? What if it goes down? You need your assessment and your decision, and then you need to tie it to your action. It's really important. All professionals do that. Let's have a look and zoom out. Using the Bitcoin KS model technical analysis indicator that I put together here, you can see the lower band of price, the higher band for the current price at this current second. We're looking at a bottom of 25,751.77. If it comes down to hit that, that's completely fine. That's within the market scope. And if it goes up, for example, to 174.263, that's the top part of the section. We're actually expecting to attract the shorts into the market. The shorts have been so low on volume coming into the market. We've been trying to get them in for a very, very long time. I think particular news like Evergrande will actually bring them in. I think what you might find is any sell-off will be potentially quite short-lived. Even the COVID sell-off was incredibly short-lived. It came down a certain percent but went up twice that amount, and that's why we always have the concept of the 10-5-10 volatility fund. We want these lightning bolts to hit the market. That is what separates a professional from just a normal investor or trader. We're actually looking for them, and when they happen, we're prepared to take advantage of them. It can take a little while to get that particular way of thinking, but it's really powerful when you have it. You don't look at red in the market as a bad thing. You look at it as a really, really good thing. The concept on the 10-5-10 fund, if you have something at $10 and it drops to $5, you've lost 50%. But say it comes back in time, well, you just returned your money. Now think of something at $10, it drops to $5, and then you buy around that figure. Whatever you put in that figure, it just now increased 100% when it gets back to $10. It's pretty neat. And that's what the 10-5-10 volatility fund is all about. It's just a certain percentage of your money popped aside to take advantage of these lightning bolts, and they happen all the time. I'd like to share something with you that Dan Moorhead said. He's the CEO and co-chief investment officer for Pantera. Pantera Capital is focused on Bitcoin, and they have $500 million assets under management. Pantera has been in the digital asset space for a long time, since 2013. Dan said a really interesting thing. He said we're still in the early innings of a multi-decade transformation. That's crypto. That will have a huge impact on literally billions of people. He suggests, even though Pantera Bitcoin Fund has done very well, up 67,000%, not a bad one, Dan, well done. Dan suggests, not just doing Bitcoin, but other protocols, and you've got to agree with him. It's absolutely true. It's analogy, he says. It's like saying in 1998, the majority of future tech gains would come from outside Microsoft. At the time, Microsoft was worth $218 billion. Apple was worth $3.5 billion. Amazon, $2.2 billion. And Google and Facebook, they didn't even exist. How about that? It's really, really amazing. There's going to be so much change that crypto is going to bring. But Bitcoin will always be dominant, no question about it. It will pass the Rip Van Winkle test. If you, for example, had twins and you wanted to put $100 Bitcoin in for each twin and then just give them that money when they reached 18, I think they would be incredibly well off. Another piece of news is Fundstrat's chief strategist predicts Bitcoin still has exponential growth ahead. Of course it does. We already know that. That's because what's actually happening, it's not about Bitcoin, it's about the Internet of Value, and it needs cryptographic assets to interact with that internet. That's what it is. It's not about currency, it's about the internet. The existing financial system is very threatened by crypto, and you'll see a number of arguments that existing players use all the time. From the Wall Street Journal, there was an article on crypto CEOs testifying before lawmakers. This is all about the House Financial Services Committee saying they want legal clarity, which Congress can provide, but they need to understand what crypto assets are. So Circle, Coinbase Global, FTX, Bitfury, Stellar, and Paxos all got together and said, okay, well, the existing legislation just doesn't fit what we do. We help cross-border payments. We make things cheaper and better and faster. We help people who want to remit payments across to other countries do it more cheaply and get away from the conventional banking system. That's just what they want to hear. I parallel it to it's like the automobile manufacturers talking to the horse and buggy makers and saying, we've got this thing called a car and it's just better. You don't have to feed it, well, you feed it petrol or gas, but it's going to really go really fast and you're going to get there really quickly and it's going to revolutionize the world. And the horse and buggy manufacturers say, well, so where do I put the horse? In front of the car? And they actually did that. It's so funny. Anyway, the critical thing is that a lot of people in the crypto area, they understand the potential problems that legislation can bring. And there's always the fear of the unknown and knee-jerk reactions that can stifle innovation and destroy competitive advantage. And this is happening all around the world. There is a suggestion that lawmakers need to write tailor-made legislation for the industry. Having faster and cheaper transactions, banking the unbanked, doesn't really cut it for the existing system. Sending money through remittances between countries doesn't cut it for the system. The system wants those expensive fees. And there's, of course, the use of these arguments that come up again and again and again. It's a threat to financial stability. Bitcoin mining wastes vast amounts of energy. Criminals use cryptocurrencies to evade taxes and circumvent anti-money laundering laws. Oh my goodness, what absolute trash. And they talk about this all the time. I'm going to do real deep dives in the masterclass about this because you need to know how to combat it. But just looking at it, Bitcoin mining wastes far less than the existing banking system and much less than gold manufacturers. Criminals would be absolutely idiotic to use cryptocurrencies because they're on the public ledger. There are some privacy coins, absolutely, but those privacy coins are getting killed off by governments. The Securities Exchange Commission, Chairman Gary Gensler, has a bit of a thing for crypto. He's basically trying to destroy the industry if he can. He's saying that he wants particular lending and trading platforms to register as securities exchanges, but Bitcoin and Ethereum are considered as commodities, which would come under the Commodity Futures Trading Commission, where their authority is far more limited. It's really interesting and important to understand the legislative framework that is wrapped around crypto. The truth is, it's a bit of a dance because we need more legislation, because a lot of the things that the legislators say is absolutely correct. The digital asset space is vulnerable to fraud. It is vulnerable to manipulation and abuse, and we see that all the time with the scams. And so is the existing financial system. It's still happening even with regulation. I know of a person that invested in Eagle Health during the pandemic. They were pandemic focused. Eagle Health didn't report, it was a Chinese company. It didn't report on its financials, and basically the ASX, the local Australian stock exchange, delisted them. But you know what happened to the value of the shares? Eagle Health didn't pay anything. And there was no recourse to the ASX. It became just a personal legal litigation issue for that particular person. Yeah, well, we can see that regulations really work, don't they? Bad actors will unfortunately act badly. That's why integrity is so important to determine. And anytime you look at a crypto project, please investigate the integrity of the team putting it together. One other really important thing in terms of adoption: AML, anti-money laundering, and KYC, know your customer, is really important in driving mainstream adoption. In Australia, we've just recently come out with some very interesting stuff. What's happening here is Australia is going to take a world-leading regulatory framework into the market. About 3% of the population, or about 800,000 Australians, own some form of crypto. But what is this actually about? I'd like to do a shout out to Nick and Aussie Crypto. What we see here, Australia mulls, thinks about Bitcoin crackdown and new digital currency. And in the first sentence is, Australians who invest in cryptocurrencies like Bitcoin may enjoy new protections. Hang on a second, crackdown? Okay, you got to love the media. Matthew, how could you? What is actually happening here is the Treasurer of Australia has come out with a concept that he wants to do the largest legislative reforms in the payment system in 25 years. Why? Because Australia wants to create its own central bank digital currency, or CBDC. They're looking at the feasibility of a CBDC towards the end of 2022. Now, what does this all mean? What is a CBDC? A CBDC, central bank digital currency, it's issued by the government and it's actually shot out to people in terms of a digital wallet that they would hold. It's like digital cash. But there are two types of CBDCs. One is a retail one and one is a wholesale one. The Reserve Bank of Australia is considering a wholesale central bank digital currency, and the Treasurer of Australia is looking into a retail CBDC by the end of 2022. This is just fantastic for adoption. Many people think that Bitcoin and crypto is just some fad. It's something to do with dogs. But it's actually the foundation of the Internet of Value. And we know that banks do not have physical cash. They have about 7% of the circulating supply of money in paper form or plastic form, but tangible form. And 93% is just ones and zeros. They have to bring in central bank digital currencies. They have no choice. It's quite interesting to note that when big names like the Reserve Bank get behind particular crypto projects and look at wholesale CBDCs, that's just basically allowing centralized distributed ledger technology transfers between major market participants in the financial sector. What they're doing is saying crypto is good, crypto is here to stay, and of course it is. It's the next evolution. Can you imagine taking your notes to Mars? How would you get change? We need to keep our eye on how the market, the stock market, the main market, is reacting to the news of Evergrande and others. Right now, it's absolutely ignoring it. How do we know that? Fear spiked up massively and just dropped down just as massively. Keep this in mind. Things take a while to play out in the economic system. Why is that? Because smart money profits first. It's profiting. It's saying to everybody, nothing to see here, nothing to see here. Everything is fine. Everything is good. Don't worry about it. We can see the NASDAQ 100 rallying. And we can see light crude oil has bounced from support upwards. It's moving into an area of resistance now. We can see the bond prices have retreated. This is a really good thing. When bond prices start to go up the wall, we in crypto need to get concerned. Absolutely. When we look at the yields rising is very, very good for crypto. There's quite an association, well, you can see it here, between Bitcoin's price action and the yields. We can have a look at gold. Gold has backed off, starting to get a medium support level through here, just trying to attack the next resistance around the $1,800 mark. And the US dollar currency index is decreasing a little bit, going back now towards support. How do we basically make sense of all of this information? We have to be aware that Evergrande is a systemic issue. But these things can take time to actually play out. That's why we don't light switch. We act very professionally, scaling in and scaling out. You can see a lot of variability in these prices. Price is always moving in a wave. If you have the capability of creating some dry powder, that is always good because traders are always booking profit. Said another way, traders are always taking profit when it reaches some particular percent, and that percent would be up to you. Traders take it. The COVID crisis actually took many, many months to play out. It was basically devastating financially, but it took a long time to play out. That's exactly what financial markets do. They can take an inordinate amount of time to actually hit the market. In between, it's just business as usual. We just trade the chart that we view. We know our probabilities. We know that we're under resistance. We need to get above that resistance. What happens if it doesn't get above that resistance and it sells down? It will get caught at 48,300 and then at $46,620. Then what happens if it goes further? In all likelihood, we'll have some buying pressure underneath here, and it should hold this particular support line. But what if everything goes south and the smart money just dumps? And it could do so, and we need to be aware of these things. If you're a long-term investor, you know the prospects of holding crypto is something absolutely foundational. It's going to be used by billions and billions of people, so long as you're in something that has lasting value. And that's the key. If you get into meme coins, well, they're memes. What does a meme mean? It basically means that someone's got a frisbee or a Cabbage Patch doll or the kind of latest thing. Well, the kind of latest thing doesn't cut it in crypto. If the latest thing becomes something substantial, if it gets network effects, if people buy into it, and I don't mean buy it, I mean it's actually got a real use case and a real value in the real world, then it stops being a meme and it starts being something valuable. A lot of people lose a lot of money on meme coins. And I want to tell you a little story. I saw something really interesting. There was a person that said they made $312 million from under a $500 investment in Doge. I ask you this question. Say that was you. I think it was $300. Say you spent $300 on Doge. Why did you wait till it was over 300 million to sell? Wouldn't you have sold when it got to $1,000 or maybe $2,000 or $10,000? After all, it's only $300. Why would you wait till it's over $300 million? Clearly the guy just forgot about it. And a lot of people see people getting rich from crypto. They see their friends driving the latest, flashiest car and say, oh, look at that. He's not too bright. I reckon I could do that. Absolutely. When's my Ferrari coming? Wrong way to think. Absolutely wrong way to think. Everything must be on the basis of professionalism. If you think about it, this is a market like any other market. You need to know what you're doing. Investing and trading can make a lot of money. We only have to look at Warren Buffett to understand that it's a very lucrative profession. However, Warren Buffett spends hours and hours and hours every day reading, increasing his knowledge, just as one example. And all the top CEOs always increase their knowledge. Why do they do that? Because they know what they don't know will get them. And the rich always go after education. If you're feeling particularly fearful, please watch episode 349, 10 Steps to Master Fear. Fear is a definite problem in life and especially in investing and trading, but there are ways to overcome fear. I'd like to thank all the very kind and generous community members who've reached out to show their appreciation by buying me a coffee on buymeacoffee.com/cryptotradingks. Thank you so much, everyone. I'd like to thank Peter. Peter said, "Hi Ken, appreciate greatly everything you do for us. I literally get excited. I see any of your videos pop up." Thank you, my friend. That's really nice. I can't wait for the masterclass. I know it will be an absolute game changer. Thank you. Thank you, Peter. And Grant, I'm loving your videos and TA, plus the extra work you put in for us. Thanks, Grant. Thank you, my friend. It's very nice. And from JB, so excited for the masterclass. The last couple of days I've had these aha moments. My brain is putting all these knowledge gems together, and at times they fall down and make so much sense. Of course, but I'm slow. I need time to understand. I think you're really clever, JB. Repetition is the mother of learning. True that. I'm so happy I'm learning new skills. Have a beautiful day, Ken. And the community. Lots of love, JB. Thank you, JB. That's really, really lovely of you. Martin. Hi, Ken. Thanks for being such an awesome mentor. Thank you so much, Martin. You're the best. And Kirk from San Diego. Thank you so much, Kirk. There's so much more that I wanted to do in this episode, but unfortunately time got the better of us. I think when you're going through the market, it's really important that you combat self-sabotage and self-doubt. They're very human emotions, and this little quote I found to be very, very powerful. When you understand how worthy you are because you are so unique, the fact that you deserve kindness, love, meaning, and every success in life means that you can have success financially, success spiritually, emotionally, in work, in life, with your family, with everything. You are worthy of that, and that's a really beautiful thing to absolutely take on board. Nobody is more worthy or less worthy than you. Everybody is worthy, just in different ways. Please let me know what you think of the Evergrande scenario. Do you think it will play out? Do you think it will play out soon or later? And how do you expect to profit from this? You've seen by the 10-5-10 volatility fund that if you have your ducks in a row, these sell-offs can be the single best ways to make life-changing wealth. So I'd really love to hear your thoughts. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers. Please say hi and let me know where you're viewing from and if you have any questions. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.